Hey, what's up, guys? This is Martin from the next forexpro.com, and I'm bringing you today to tell you why price action of price confirmation is somewhat of an illusion, and that's it's something that professional traders uh, are not looking at. Now, there are different ways to trade price action, and everybody has their own style. But what I'm trying to say is that when retail traders are getting in the market, professional traders are already in profit. And it's not to say that retail traders can't be profitable. I'm just saying that professional traders or traders that do wholesale, get in wholesale prices, are already in profit, and the risk to reward ratio speaks for itself, and that's what I want to go over in this video. So we have right now two charts in front of me. Just go ahead and focus on these two. As a matter of fact, I'll go ahead and expand them right now. Now this is euro dollar. On the left hand side we got the 60-minute, and then on the right we have the 1 minute. This is pretty much the FX PM system, and if you notice these red arrows, these are sell signals that the system produces, and as one is trading, you're able to take advantage of those signals. Now, the reason I want to bring this to the attention, and the reason why I say that statement, that when retail traders are barely beginning to get in the market, wholesale traders are already in profit. Now, if you notice this candle right here, this nice red candle. Now let me see if I can grab a quick rectangle. If you can see this candle right there, now there's two ways you could have waited and got into the market. Most of the time there's traders that are looking at trend lines. Obviously this is one of them, and this is where it broke through, signifying that it was a break of this trend line, and the market is more likely to start heading to the downside, at least for a short period of time. Alright, and there's still another trend line. If I draw it right here to right there, there should be, that's pretty much another significant level that the market would look to reach for. That's if you're a trend line trader. It really depends on your style. I'm just gonna try to make the point that I'm trying to make as clear as possible. Now, once more, if you're a trend line trader, this was broken out, and this means that the market is more likely to go down, to start heading down. Not just that, but you have some confirmation of some support, structure support. This is one hit, and then it hit again, making some structure support. Now, typically you would have wanted to enter at this level right here. This is probably one good retail entry at this level here, which is a high of 1.1266. An optimal level would have been the high of this red bar right here. Let me go ahead and draw a rectangle right here, and then the market would have given you another opportunity to get up here. Now this could have played different ways. What if this huge red candle would have closed the other way? That means breakout traders are pretty much ready to get into the market. Now, if you're a counter trend trader, then obviously your entry would have been somewhere around this area here. Pretty much, just let me go ahead and be safe to say, because I know there's that somewhere your entry would have been somewhere around there, you know, somewhere around those lines, and that's where counter trend traders would have been ready to enter, you know, risk the market, and see if they're correct, right? It really on depends on what your style is. That's just what I'm seeing. I'm just moving these things out of the way, that way they don't need to bother me. Give me a moment. Okay, you know what? I'm just going to go ahead and continue. There you go. Okay, now, typically if you're a counter trend trader, this is where you would have entered, so that's still a good entry at the high of this level here. So right in between where this horizontal line is, that's a good level. Once again, optimal level would have been somewhere around here. And you know, you would have put your stop above, and you're around 30 pip stop, somewhere around there, you know, so it's pretty good. Once more, trend traders looking at trend lines would have waited for this breakout and are still waiting for the market to come back up into this trend line, possibly enter, have your stop right above that, and try to get a one-on-one risk reward. So that's pretty much what it is. Now, if you're trading the FXPM system, which is what you see in front, this is when the signal had generated. This is when the software generated the signal at the high of 1289. Now, keep in mind, guys, that this candle here, the high of that candle is 1289, as you can see, where it says high 1289, 1.1289, same as this, 1.1289. Now, if you would have entered around, even if you would have entered around the right on at least 88, 87 level, anywhere around this candle here, when the software generated the signal, your stop would have been at least 7 to 10 points, right right just above here. You see that? And your entry would have been somewhere around here. And keep in mind that you still would have been able to catch the trade to the downside, and either way you would have already been in profit a long time ago. And this is the power of knowing when to get in at these wholesale prices. That as you're already in profit, retail traders are still waiting to either join, you know, still waiting for their confirmation signal, and while some counter trend traders are biting their nails, waiting to see if this market is going to, you know, get them the winner trade that they need. Obviously, as you can see, if you would have been trading using the FXPM system, you would have entered here, put your stop right above. There's about nice 5-7 point stop, and the market quickly went down. Now, keep in mind, this is a 1 minute time chart. All right. I mean, this went up from 12. This was a high of 1289. Right away, in the next candle bar, it came down to 1262. So you would have already been 20 points in profit, giving you already around 3-to-1 risk reward ratio. And if you would have waited, held in longer, you know, to the downside, which is, to the downside, then, you would have been that much in profit. So another reason why I wanted to show you this is because you don't need to risk 30 points or 50 points or 100 points to make those 50 or 100 points. You can just as easily, with this FXPM trading system, risk 7 points, 5 points to make the same amount of points. And that's the power of buying or selling into wholesale prices. And just keep that in mind. When retail traders are getting in the market, wholesale traders are already in profit. And that is powerful right there. But anyways, thank you guys for watching. Hopefully I was very clear on this. And if you guys have any comments, check out my page, drop a comment below. And if you guys are interested in learning about this, then visit thenextforexpro.com and sign up. Other than that, you guys have a good one. Thanks for watching.